Hello traders, Gary Wagner here, just after 10 o'clock in Honolulu, 4 o'clock in New York. It is Friday, happy Aloha Friday as we say on the islands. It's April the 7th, 2017, and this is the Daily Report for Gold and Silver, our weekend review. And traders, what a week we have seen, culminating with the last 36 hours in which we have seen some of the more volatile swings in not only equities, but the precious metals and the dollar that we have seen in a long time. Of course, this is due to a multitude of events, whether it's the jobs report or the military action taken on by the United States. We had a lot for traders, market participants, and analysts to really focus upon and to digest. Gold all over the board today. It traded to a high of 1273 when we look at June futures. Currently we are at 1256.60 with a low of 1252.40. That low is important. We'll talk about that as we did trail our stops up today. Spot gold, that's also trading higher at 1254.98. Now realize that this is a moving target, so prices have been quite volatile all day. Silver, on the other hand, managed to gain a little bit, but gave it all back, trading really at $18 if we look at the futures contract, low 1786, and the high on the day 1849. When we look at spot silver, that is currently trading also at $18. In other markets that we follow, the Dow Jones Industrial Average closed or opened up very, very soft this morning, traded into positive territory, only to close in essence unchanged on the day at 20,656. Standard & Poor's did manage to really close unchanged also at 2356.45, and then the NASDAQ closed up, but nominally up at 58.80. Now, the real movers that we want to follow, of course, is the dollar index. Dollar index at 101.10. That's up about 0.5%. But traders, it had traded to a low today of 100.40, quite a ways away from where we see it now. It went to a 5-month low and then closed pretty solid on the day. And lastly, crude oil. Well, crude oil closed up about 1% at 52.23 per barrel. Considering the conclusion and final trading day of this week, beginning on Monday, we absolutely had one of the more volatile weeks that we have seen in a while, and the last 36 hours extremely volatile, to say the least. To give you an idea of our current trading status, I've put together a chart which basically chronologically goes through the trade that we're currently in. And if you recall, as this market went up, we were late for the party, but we did get in. Back about a couple of weeks ago, we issued a buy signal. Traders taking that call got in at 1237. The market traded to a high of about 1260. And then as the market began to come down, I did send out a special trade alert, which recommended that we raised our initial stop to either below 39 or at 1248. The traders that took the more aggressive stop at 48 exited the trade at 47 as this market came down. Those that took the more conservative stop, which was at 1329, were able to ride out these lows right in here. As you can see, this is 1240. So as the market started to move back up, and this is bringing us up to last week, Friday, I mentioned that we really wanted to see some kind of dip in the market. When that occurred, we would send out a special trade notification. That actually occurred on Monday, and it was this series of candles after the market dropped, and it was this green candle right in here where we actually sent out a trade alert, which said for those traders that pulled profits at 1247, you can re-enter here. So traders here re-entered at 1250. So now they had $10, $11 of profit, re-entered a trade, and the traders that were still in were riding the initial trade at 1237. As this market went up, and this is the craziness that occurred, of course, over the last 36 hours, we saw it pop, trade to a high of 1273, and as it came down, I recommended, and we sent this out early this morning, and that was to move our stop from below 1239 to below 1253. Now, the low today was 1252.40. If you recall from yesterday's show, I talked about precise parameters of when I say below. If I say just below, we're talking about $1. If I say below, it should be $2 to $3 below that price point. So below this particular price point of 1253 with a low of 1252.40, we just narrowly escaped getting stopped out. Market is currently trading at about 1256, 1255.90 as we go into settlement and close out the weekend. So we're not out of the woods yet, but if we do get stopped out on Monday, we're going to get stopped out with a nice, healthy profit. Traders, maintain your current long positions as well as your current stops. And so traders, this is one of my primary concerns about how we saw gold close today. We are looking at a simple daily chart, but we have our 200-day moving average. That's a solid light blue line right here. Absolutely broke above that during trading as it traded to a high of 73. But it's now at 1256, which is roughly $5 below this 200-day moving average. So we still have some definitive headwinds and some strong resistance at this particular price point. And that's one of the reasons I believe that we're not out of the woods yet. No doubt one of the primary reasons for the abrupt and quick price reversal in gold was a price reversal in the US dollar index. The dollar, especially against the yen, was getting hammered at the early part and morning of the trading session itself. We're looking at a daily chart. You can see that these lows that come in are coming in at around 140. This dashed line, of course, is our 50-day moving average and our 200-day moving average. You can see how eloquently this low lined up just above that 200-day moving average. We've seen some real dollar strength, and then coming in today, we not only had volatility, but we ended on a very, very firm note, going from negative to positive in terms of the dollar index today, and that's what we really want to watch next week as a cue to what will happen with gold pricing. Traders, what a week we have seen, and what a finale to that week. Over the last 36 hours, I have to say, as I said in my opening letter, it's been a hard day's night, a very, very tough day for market participants and analysts. Now, we talked about the current trade that we are in, where we moved our stops up, and kind of the entire scheduling of how we put that trade on. Right now, we have stops that have not been hit, although they're fairly close. But if they do get hit, they're going to knock us out with some very good profits on this trade. So traders, maintain your current long position in gold as well as your current stop. This has been Gary Wagner wishing you, as always, good trading. We will talk to you on Monday for another daily update and review. Bye-bye.